stay away from currency derivatives. I stay away from currency. I stay away from paying off all my debt. I find someone that wants to extend me long term. You have a dental practice? Then borrow, if you could borrow money from a bank against your cash flows, if you could create a company, raise equity or raise debt, borrowing against the cash flows of the company, then you invest that into high quality property like Bitcoin, you would do what MicroStrategy did. You've got some money. Yeah, you got credit cards. Max out your credit cards and buy yourself a sale and put up the sale. And if you can get a mortgage, it's a bigger sale. And then turn the boat to tack against the wind or tack into the wind. You can sail 45 degrees into the wind or something, whichever direction you want to go, but you're going to have to sail. You're not going to be able to row anymore. You know, if you get going the right direction, you can help yourself out a little bit, you know, by steering. But you take on a bit of intelligent debt. You have a house, you can get a $50,000 of equity out of the house. You take $50,000 home equity loan at 2.5% interest or 3.5% interest, and then you buy some high quality property like Bitcoin. Bitcoin goes up 100%, then you're going to scrape 97% on what you borrowed. If Bitcoin goes up 20%, you're going to scrape 17% yield on what you borrowed. If Bitcoin goes up 10%, you're going to scrape 7% yield on what you borrowed. But the point is, you have hope, you have a plan. And it's different in every country, and it's different for every person, right? It's like, by the way, the inverse of that is you've got a student loan. For God's sake, don't pay it off. Let me be clear, because haters are going to say, Saylor said, don't pay your debts. That's not what I mean.
Saylor is a Bernie Sanders supporter.
What I mean is, don't pay it off early, right? You have a mortgage. Don't pay off your mortgage. Stretch the thing out as long as you can. If you have options to refinance it, take advantage of your credit lines and take long-term debt that is not marked to market at a low interest rate. And pretty much just about all consumer debt is historically low rates. We've never been in an environment where you could borrow US dollars over the long term cheaper. Not in my life. In fact, probably, not in anybody's life that's alive today.
It's a 300-year low.
Yeah, so when you make the decision to pay off your mortgage or you buy your car in cash, don't buy a Lamborghini with your Bitcoin, right? Don't pay off your car in cash. If you need a car and if you need a house, what you want to do is leverage them up to the hilt, and then you want to have performing assets. There's three types of property. There's Bitcoin, digital property, which is the best. And it's been going up 170% a year for 10 years. And if it doesn't go up 170% going forward, it'll still outperform every other option. So that's the best. And then the conventional view is I buy a diversified portfolio of like tech companies. Like if you bought NASDAQ, you get 18% a year for a decade. I made a lot of money basically on the big tech trade. I just bought Apple, Amazon, Facebook, Google. I bought tech monopolies. Like, when can you tell they're a tech monopoly, right? You could have told they were all tech monopolies in 2011, 2010, for a decade. Are they still tech monopolies? Yeah. If you're going to bet on, the funny thing today is people are like selling the tech companies and they're buying these value stocks. If you're going to bet on anything in a hyperinflationary environment that's a company, you bet on the monopolies, right? There's two things you want. You want to own a monopoly because monopolies can raise their prices with impunity, right? That's the one thing you want. And the second thing you want is you want a digital dominant network. A company like Apple, they could release a new device that everybody's got to buy, or they can ship software to everybody. Like Microsoft can ship software to every company on earth. If Microsoft were to get in a fight with the government, the government would probably back down. At the end of the day, could an entire government, there's probably 5 governments on earth that might have more power than some of these tech monopolies. So Italy, or Greece or Poland, if they got in a fight with Microsoft, they would probably come to terms, because you can't turn off Microsoft. Just like you can't really turn off Google. Just like you can't really turn off Apple. If you don't want to buy Bitcoin, which is the dominant digital property network, you buy a mixed portfolio of dominant digital tech networks, because they've got incredible power, right? Pricing power and they've got optionality.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
Third thing is maybe you buy some property that you're going to live in. Like you buy your house or you buy the land, the farm that you can live on, right? A safe place, right? That you can reside on. Maybe Labra buys the boat because I guess you figure you take the boat to the BVI and you float around and you live on it. Some property that you can live on that will sustain you. If you think that you want that, if you want to live on it for a decade, or if you want to live on it the rest of your life, that's safe. I described 3 kind of high quality forms of property. The highest yield is going to be overweight Bitcoin, right? The other 2 are intellectually justifiable. What don't you want? You don't want to be loaning money, right? You don't want to loan money to the government, right? So you don't want to pay off your debt. You don't want to own currency derivatives. Owning a pile of cash, bad idea. Owning a 30-year government bond that yields 1.7% interest, bad idea. Owning any bond that pays a fixed yield that is less than the monetary inflation rate, which is like all of them, for a consumer, not a good idea. Look, if you have a bond fund, if someone gave you $10 billion to invest in fixed income bonds and you get 2 and 20 and you can scrape the yield, I mean, then it's okay, then it's a business. But if you're just an individual, right, or a company, then no, bad idea. If you own a company which is growing 0% a year that generates cash flow, it looks like a bond. It's a currency derivative, right? If you own commercial real estate that has long-term leases and the leases are capped at CPI, or even less. A lot of times long-term leases are capped at 2 or 3%. If you own that, and then the inflation rate is 15-20%. And I think the inflation rate's running at least 15% a year for the next 4 years. I mean, I don't see how you can think it's less than that. If you own anything that's capped out, if it's not going to grow 15% a year, you have a currency derivative. You can value a company based on its trophy property. I value Disney because it owns Bambi and it's Disney. I'm valuing it based on property, intellectual property. It's a trophy. Or you can value a company based upon its cash flows. It's a currency derivative. So you see here, if you're expecting inflation, if you're going to own anything, it better be property. It better be a stock that feels like it's valued based on property because it's a trophy asset. It should be real property. Ideally, real property you want to live in the rest of your life because you don't need to rent it out. If it's rental property, and it's short-term rental property, and it's a monopoly, maybe, if it's a trophy. But if it's long-term capped out, it starts to look like a bond. Stay away from currency derivatives. I stay away from currency. I stay away from paying off all my debt. I find someone that wants to extend me long-term. You have a dental practice? Then if you could borrow money from a bank against your cash flows, if you could create a company, raise equity, or raise debt, borrowing against the cash flows of the company, then you invest that into high quality property like Bitcoin. You would do what MicroStrategy did. In essence, we put up a $500 million sale, and then we borrowed another $2 billion to put up 4 more sales, you see. So we ended up basically putting up $3.6 billion worth of sales, right? It was $250 million in cash. Then I did a Dutch auction to get another 175 million. Then we borrowed, 2.2 billion. Then we issued 900 million in equity. What we were doing was financing to put up $3.7 billion worth of crypto sale called Bitcoin. We end up with like a $6 billion, Bitcoin sale. And if Bitcoin only goes up 10% a year, then we just generate $600 million in shareholder value per year.
Do you want to know one thing about crypto? I made over 3000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where to start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really, really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.